All right, welcome everyone to Wednesday's live right after we had FOMC and Jerome Powell conference. Hey, welcome Joel, welcome. So we have a lot to unpack. First of all, let's go over what FOMC results were. Okay, and let's go over how and what Jerome Powell was saying. So, beforehand though, I do want to point out that the members of the CFO Swing Watch have already known what was going to happen today and kind of what Jerome Powell will be speaking on for today as well. So if you guys want to join in and to get information that's ahead of actual news, make sure you guys check the link in the description box below for the CFO Swing Watch newsletter. It's very easy to find, hard to miss, so make sure you guys click on the correct link in the description box below. Alright, so for FOMC results after 2 days of deliberation, they basically came up with another 75 basis point interest rate hike. So they've basically had another hike. Right, and so far, this is the third consecutive interest rate hike. And I think this has been their plan all along, since they did mention that they're going to be front-loading interest rates since early this year, right? And I think this is part of that plan. And depending on how inflation is for the next 2 months or so, okay, the November FOMC meetings that come in 2 months will either give us a 50 BP interest rate, so we go back down, but essentially we're still increasing interest rates, okay? Or we can get that crucial 100 basis points or 1 whole percentage point increase in interest rates, right? So that's kind of the 50-50 there right now. I need to see more data as well if I want to make a better, I guess, conclusion on what the Federal Reserve will do in November, since that's a little bit far away from now. However, I do have a guess that the Federal Reserve might just bring down the interest rates to 50 basis points, right? That's still an increase, right? But they're still going to, bring it back down from 75 to 50 basis points. So that's my guess. Now, don't take that to heart. I'm just saying that as a guess. So I guess you would call it a guesstimation of sorts, but it all depends on what the data is in the next few months, okay, especially the CPI data. Now, the Federal Reserve basically is saying with this interest rate hike again with the same 75 basis points is that, hey, we're going to continue to front load these interest rates, right? But we're afraid that we're not going to be reaching our 2024 target, right? We've had at least 2 governors, I believe, from the Federal Reserve saying that, or maybe it was 1. I don't really remember, but I have a lot of information in my head, guys. I read so much every single day. I sometimes read hours and hours of content, so sometimes I can have no memory of something that I've read. So excuse me if I don't remember something correctly. But please correct me if I'm wrong on anything in the chat. That those 2 Federal Reserve governors, or 1, they've said that they're kind of afraid that they won't be able to reach the 2% target by 2024. Now that's pretty interesting, right? Because remember, the Federal Reserve is basically there to fight inflation. They are the core, entity, right? They're the core entity of the government to fight inflation, right? They're the inflation fighters. Now, who will want this very, very important entity around the globe to lose on its own domestic fight over inflation when it's supposed to be their objective and their main job, right? So this is one of the main reasons why that I think the Federal Reserve is going to move the interest rates lower on November's meeting, right? To 50 basis points, right? That's just my general hunch, right? That's the reason why I'm guessing or guesstimating that the Federal Reserve may just bring down the interest rates to 50 basis points instead of possibly moving it up to 100 basis points, or just keeping it at 75 basis points for the fourth consecutive time, right? So, it's something that, I think you shouldn't take to heart. Just because I was right the past couple of times does not mean I'll be right again, right? It's just my personal hunch, okay? I think the Federal Reserve has to save some face here, right? They've created inflation, right, by printing a lot of dollars, and a bunch of other things. So, I don't think they want to get wrong twice, especially in a situation that they've created, right? They're trying to provide a solution by being the people who provide the solution, right? So they're not going to mess things up, right? But here's the problem. This is what Jerome Powell also confirmed what I've been saying, right, today in the conference. He said that they're still looking at incoming data as well, right? They're focusing on incoming data, which is the reason why people are being very, very, they're basically looking down, right? They're looking down on the Federal Reserve because they think that they're lagging behind, which I also think they're sort of lagging as well, right? But here's the thing, right? Inflation is hard, right? Especially with all these uncertain circumstances that we're in right now, and the wreck that the onslaught of the COVID-19 pandemic brought, right? So it's a hard position, right? I can understand that, right? But remember, the Federal Reserve has the instrument, they have the tools to fight inflation, and if that doesn't suffice, what will they do, right? What are they going to do, right? And here's the thing, right? Here's the number one thing that I think is really, really making them literally stressed out of their minds, right? The personal spending habits of consumers have drastically changed over the last 2 years, right? And the Federal Reserve has been trying to quash demand every single time that they've increased the interest rates by 75 basis points the past 3 consecutive meetings, right? And for the past 3 consecutive meetings, we've seen inflation go up, right? Or slightly go back down, but without much change, right? There isn't a drastic fall in the CPI data. And I think that's been caused mostly because of a strong labor market, and for the fact that we are seeing increasing wages along with the increasing price. And when you have an increase in wages, right, people are able to spend more, right? It's not just the fact that they've changed their spending habits psychologically and mentally, right? They're able to do it, right? And this is a kind of a new situation that's been brought on with the COVID-19 pandemic, and people, along with that change of spending habits, they're using their savings accounts, right? And that is a huge problem. And people are still growing their savings accounts while simultaneously tapping into those reserve accounts, right? Reserves cash that they individually have, and they're spending it and putting it back into the economy. And remember, that is not the point of the Federal Reserve and what their objective is. They're trying to crush demand, right? And so that it can relieve some stress for supply. They're trying to create a balance in the overexerted demand and supply chains right now, right? So, it's one of those things that, like I said, that they're going to have a lot of trouble with. It's going to be hard to force people to stop what they've been doing for the past almost 2 years now, right? Because, the spending habits basically changed as the economies were kind of opening back up, our countries were opening back up as well. And some people start to see, a lot of prices starting to increase, but they still spent, right? And that is the major problem. So for the next few months and into next year, we'll see what's going to happen. Okay, so that is my kind of overview on what I have for FOMC results today and from Jerome Powell's conference. But one last thing that I want to mention is that Jerome Powell was also, for some reason, I felt like, to me, just as a person, he looked as if he was kind of backing down. It almost felt like he wasn't trying to be hawkish anymore, right? Which is kind of weird because, inflation is still high. Or, okay, this is what I've thought as well, they've already got inflation under control. But they're not willing to share that with the rest of the world, right? because they're still looking at incoming data first, right? They don't know if we're going to see a steep dive in CPI, which is the reason why Jerome Powell said that an entrenchment of inflation may be here for a couple of years, right? I believe he said that. If that's wrong, my apologies. Like I said, my memory it can be very, very, very bad when especially on a day like today when I'm reading for hours, right? So it's one of those things that I think with Jerome Powell and his tone today, that he's just having trouble trying to really please the markets and please the current administration and please basically anything that's involved with politics as well, right? And on the monetary and fiscal side of things, right? So, he has a lot of pleasing to do, basically. Who knows? Maybe they do have inflation under control, and the fact that maybe that's the reason why I have a hunch that they may be decreasing the interest rates by 50 basis points, right? Those interest rate hikes may just be 50 basis points into next year as well, right? And one whole percentage point may not even be on the table anymore by next year. So who knows, right? And we're still looking at incoming data as well. All right, so that is it for FOMC. The more data I get and the more I read in the next few weeks, I'll bring out more conclusive analysis on what could happen for November FOMC. But so far, we've been right in the CFO Stream Room Watch newsletter. So if you guys want to join, make sure you guys click on the link below. And I believe in the description box below, there is discount codes that you guys can use. So make sure you guys use that. Okay, with that in mind. Okay, so that was a handful, I know. Whoa, 5 likes. Thank you guys. I didn't even notice that. Thank you. So with that in mind, let's go over SPY here. So on the technical chart, right? On a technical chart, we are currently in a downtrend, okay? And let me mention one thing though. Today, we reached a specific target that I want to see a bounce at, right? And that's at 377. So we broke below the 382 intraday support, which I mentioned in a live a couple of times. I think a couple days ago, I believe. And we also broke below the critical psychological $380 level. And near close, we almost touched 377. But after hours, we kept on plunging. And we hit, I believe, 375. Right? So with this overreaction, and yes, this is an overreaction, okay, there may be a possibility that we might see a very, very large green day tomorrow. And using previous data points, okay, on the charts, whenever we had a huge down day on FOMC, the next few weeks, we started a short-term uptrend. So those are your risks if you guys are mostly short right now. Okay, remember this. Right now, I'm not trying to, burst your bubble or anything. I'm not trying to, demean your short positions or anything like that, or break your mentality or anything. I'm just doing a basic risk assessment, okay, using these technical data, right, and using previous data as well. So make sure you guys remember that usually, and from the previous data points, after the FOMC meetings were finished. Okay, and especially when the day ended with a huge downfall in price, we tend to get a short-term rally in price. Okay, that is your huge risk that you have for your short-term positions, especially if you're looking to swing. All right, so with that in mind, okay, if we do break 377 tomorrow, and if we gap down overnight, right, and we somehow gap down even more than after hours, so below 375, then we can possibly see a retest of 372 to 370.50. So let me just use these levels here, these lines. Okay, so there could be an intraday bounce at 372, and if we don't hold that intraday bounce, then we're going right back below to 370.50. Okay, I can't do it as accurate here, but that's kind of the range that I have for now if you continue to move lower. Okay, but if you go on the weekly time frame, we get a better understanding of what the price is doing, right? There's a clearer picture here. And so far, the trend is still downside. All right. Now, I don't know if we're going to end up with more volume than last week. Okay, because last week's volume was 467 million, right? Basically 468 million. And this week so far, we have half of that, right? 257 million. And we have 2 trading days left. And if there is some big catalyst in the last 2 days, then there's a chance that we can overtake the volume from last week, and we can see an increase in selling volume printed on the weekly time frame, which would mean that there's further downside left. And with that further downside movement, we can see a complete retest and a second retest this year so far at 363, which is our line in the sand level that we need to hold. Okay, now I don't know if you guys remember this, but earlier this year, I think middle of I believe mid-July or mid-August, I was talking about the potential range that SPY can make between 362 and 415.70, right? But after we reached 415.70, we actually just overshot it, right? We overshot and we retested the weekly 50 SMA. So who knows, right? If this line in the sand doesn't hold for a second retest, we might just overshoot below it, right? And if that does happen, there's a chance that SPY could actually be making a broadening wedge instead of a very, very macro and big bear flag that we're seeing right now. And, you know, it's one of those things that I think can be very, very confusing for beginners, especially, right? Because they think that chart patterns can't change while the chart pattern can still be forming, right? But like I said, with more time, okay, gives you more data. So if we do retest 362, if that does even happen, okay, we can see a potential move lower, and we can overshoot below and possibly even retest 350, which is my ultimate profit target or price target for SPY. Okay, now we need to break below. We absolutely need to break below 363. Okay, for that to happen, obviously. And we still have a lot ways to go before we even reach 363, which is the reason why I'm not going to concentrate on the line in the sand just yet. Okay, I'll be more aware of it once we reach 377. Okay, 372 to 370.50. Okay. Does anyone have any questions? No? Okay, perfect. So I know there's some lag, so if you guys have sent in questions, I'll read it, don't worry. So I know some of you guys may have noticed that I have changed this trend line here on my chart, right? You might be scratching your head, you know, hey Andrew, why have you done that, right? Well, first of all, my chart looked like this on the weekly time frame, right? And it's obviously depicting a macro bearish flag on the weekly time frame. And if I do this, then it looks like we broke below the bear flag, which we did, right? That is confirmed. And we also were able to retest the ascending support, which is old support now, as new resistance yesterday, right? If you guys didn't know, on Tuesday we bounced really, really hard, right? So thanks to that bounce, we're able to retest this general area of this old support and reject off of it, making it a new level of resistance, a new level of ascending resistance. So, so far we got confirmation that this downtrend is indeed intact, and we need to be continuing to look for a movement lower. However, okay, the reason why I brought out this resistance, this new resistance, and put it as a potential pivot point for a new support is that, well, if my thinking is correct, with a broadening range on SPY, there's a possibility that we can see a complete bounce for this week on this coinciding pivot point. And this coinciding pivot point is at 377, along with this ascending potential support trend line. All right, so this trend line here, okay, is something that you guys should be watching for, and that critical 377 level, because if we do end up gapping down tomorrow at open, and if we don't even try to retest 377 and even reject off of it, then we're most likely going to continue to move to the downside. Okay, and preferably if we do gap down and we retest 377, then I would love to see a rejection, because that will also confirm for the rest of the week the trend, which will be to the downside. Right, so everything's pointing to the downside so far. Right, that's all I'm saying. Right, but the only thing is that there is that risk, like I said, after FOMC. So make sure you guys are on watch for that, for any big pivot points on SPY. Okay, so that is it for SPY. Does anyone else have questions? Does anyone have questions for SPY here? Ooh, good old water. So as I'm waiting, let me tell you a fun fact about me. So usually, a lot of people ask me, what do you do on your free time, right? And I literally tell them the truth. I read. I'm reading, right? Or sometimes if I'm not reading, I'm just being on social media, right? And doing my content stuff, right? But most of the free times, I'm reading and reading. I usually have a video in the background on anything that I want to watch to keep me, company as I'm reading, right? I'm one of those people that like to have something in the background playing, either music or videos while I'm reading, right? So it could just be regular books, right? Or stuff that I want to research on, right? And that's the reason why I, truly believe that, reading is so important, right? And that's the reason why I've created the CFO Swing Watch newsletter, because I know there's a lot of people who don't have the practical time. It's not practical for them to just do hours and hours of research, right? So that's the reason why I've always provide that. So especially on a weekly basis, I mean, that should be enough, right? And that's the reason why I created it, right? And that's basically what I do every single week. Right? I just do a lot of reading. I just soak in as much as information as I can. Dollar Bill, what's up? It's been a long time, man. Wow. You said, what's your pivot point on SPY? 380. What do you mean by that? Pivot point as in like a pivot point low, which would mean a bounce, or pivot point high, which would be a rejection? I guess you'll be talking about a pivot point rejection, right? Pivot point high? Right, since we are below 380, so I would say, I would assume that you're talking about a potential rejection at pivot point below 380, right? If we do reach 380, but using that assumption, I'll go with that assumption. If we do bounce, yes, I do believe that we can see some resistance at 380, since it is a psychological level, and I would expect the bounce to go a little bit further than that, to be honest, right? And this is all just, okay, rejection, perfect. So this is just on using the data points from the past, right, after FOMC meetings, right, especially on the days where we saw huge selling going on, okay? At the next few trading days and next few weeks, we usually get, or next few trading days or next few trading weeks, we usually get a short-term uptrend, right? So I would believe that I would want to see at least a break above 380, but if somehow sellers are just too strong, I would say 380 is a great entry again for a potential short position to the downside. Does that make sense, Dollar Bill? Okay, so yeah, 380 is a great rejection area for a potential bounce to the top, right? After this downward short-term down movement is done, okay? And if you do see a very, very strong rejection, then that will be a great entry point. Good question. Give me a thumbs up if that makes sense. To everyone, actually. Doesn't really matter. I'm talking to everyone usually when I'm answering a question. So hopefully everything makes sense. Okay. Hey, do nothing. What's up? What's up? Thank you for the thumbs up. Thank you for the confirmation. Dollar Bill, hopefully it was good. Perfect. Another thumbs up. All right. 2 thumbs up. Okay. So Of course, you got it, man. So that is it for the SPY analysis. Okay, hopefully you guys are able to use this correctly. Not correctly as in, okay, I'm not saying that my analysis is going to be correct. I'm saying correctly as in on your part. Right, you guys are able to execute correctly. Right, and what I mean by that is that you guys should always have a game plan before you get into trading any type of setups. Okay. But yeah, wow, 6 likes. Let's go. Now, for the people who are just coming in here as a new viewer, you guys, if you guys want to talk in the live chat, you guys need to subscribe. Okay, and also we do have a goal every single night to reach 10 likes. By the end of the live stream. But hey, if that doesn't happen, I'm completely fine. I think it's just a fun little, thing to have for every single live stream that I do. So if we're able to reach 10 likes tonight, then that'll be great. Okay. But like I said, no hard feelings if you don't reach 10 likes. All right, I'm not gonna be so hard on you guys if you guys can't give me 10 likes. I mean, that's not what I'm here for. I'm not here for likes. I just want YouTube to push out more of my lives because I know that it helps out a lot of people, right? Especially when they're first coming in and watching these lives. So hopefully we can always reach the 10 likes for every single live stream. And when we do, thank you guys very, very much for helping me out. Okay, so that is it for tonight. For all the people who are just joining in, I apologize. This is the end of the live stream. If you guys want to know what I said about FOMC meetings and what I think about the future and my SPY analysis, make sure you guys watch the recording of this video, which will be posted right after this stream is done. It's going to be posted on default, right? And make sure you guys skip to around 4 minutes and 30 seconds or around 5 minutes if you guys want to be sure. Okay, so let's just say 5 minutes. Just skip to 5 minutes of the recording and you'll see that I will start speaking from that point forward. Okay, so make sure you guys watch the recording because it's essential that you guys understand where I'm coming from with FOMC, my thoughts on FOMC results and potential future FOMC meetings and their results, and what I think about Jerome Powell as well. Okay, so make sure you guys watch at the 5-minute point. Okay, starter point. All right, so that is it for tonight. Thank you all for tuning in. You guys have been absolutely wonderful. Thank you, Dollar Bill. Shout out to Dollar Bill for sending a question. But this is it for tonight. I'll see you guys all tomorrow. And make sure you guys are always remembering to work hard and trade smart. Thank you, everyone, and have a good night.